All right, folks. Well, this is Mike Smith, and he's here on behalf of Hockey Trading. Now, originally from the UK and now based in Western Australia, Mike Smith has almost 20 years as an investor in options trading, as well as other financial instruments, and has been educating and coaching others to do likewise for an excess of 7 years. Now, although he has experience of a range of different vehicles, his major focus, both personally and in education setting, has been in the context of options trading and psychology of trading. Now, as well as development of his own programs of education, writing and presenting, he has acted as a consultant for many other education and investment organizations, aiming to offer their clients a greater insight into the discipline, consistency, and knowledge that it takes to become a successful trader for a lifetime. Now, his enjoyment and passion for teaching, they make him a sought-after speaker, and he is regularly presented at conferences, workshops, and online events. So amongst others, he currently consults as options specialist for hockey traders. So with that, take it away, Mike.
Thank you so much for your very kind introduction. It's a pleasure and a privilege to be with you all today. It is 3:15 a.m. here in Australia, so if I don't sound quite as perky as normal, then please excuse me. But I am excited about being in front of you today. So remember, it's your session, not mine. I've got a lot of information that I'm going to share with you, which I think is important. But please feel free to ask questions at any stage. We'll have a couple of breaks in the presentation so I can have a look and answer anything that is burning from your point of view. Really, what we're about today is looking beyond the zone, how to take your trading decision making to the next level. As has already been said, part of my interest in the trading sphere is teaching and coaching the psychology of trading and trading decision making, as well as the option trading, which is my particular trading passion. So as has already been said, I've been trading for 20 years, and I've taught systems thinking and decision making at postgraduate level at one of the universities in London before I moved over here to enjoy the fruits of Australia and all the delights that it has over here. And really, it's probably the most quoted statement that 80% of your trading success is due to what's between your ears, not what you see on a screen. But really, in terms of the attention and focus that people give psychology of trading, it's not very sexy. You've had lots of fantastic speakers sharing lots of wonderful things with you today. But the reality is that it doesn't matter how many great indicators are put in front of you. It doesn't matter how great your systems are. It doesn't matter whether you've got the best equipment in the world or the worst. What matters is what you do with that, your interaction with the market, your decision making with the market, your psychology in terms of how you make decisions and take those decisions into behavior. And even though it's not as sexy as looking at the latest indicator that might make you millions, and so it might be something that you put by the side as perhaps I'm an ill-disciplined trader badge you wear with pride, it really is absolutely essential to invest some time in yourself, invest some time in knowledge about what it takes to make great decisions consistently, what it takes to make sure your emotions are channeled as they should be, and what it takes to become the trader you can be. I really trust that you subscribe to that and don't just pay lip service. And my job today is just to give you a quick tour about some of the things that you may want to look at beyond what you may see from what I call the beer mat or the matchbox psychology brigade, who are those guys who, what they really know about psychology, you can write on the back of a beer mat or matchbox. So I'm going to talk some concepts. I'm going to go fairly quickly because really some of these will resonate with you and some of these won't. So your job really is to pick out those things that feel right to you and make a decision that this is something that perhaps you need to look at in a bit more detail. Just that sort of makes sense. So what we're going to look at is that there are attributes that go to make up a great trader, and I call them intelligences. You need to have these in place to move from where you are in your trading now to where you can be. Now, there's very, very few traders that I've met that don't believe that they can't make their results better. And I'm assuming that many of you are in that place. And so there are many reasons why and how you can make trading better. And we're going to look at those briefly. Everybody has some stuff that they come to the table with when they become a trader. And there are two overriding biases that I want to briefly talk about, that again I want you to plant your flag in one or the other. The idea being that awareness is the start of any work on yourself. If you've got an awareness that you've got something that's going on with you that's getting in the way of potentially the best results that you can get, becoming the best trader you can be, then having that awareness, identifying which one may be you, is obviously the first stage in getting something done about it. We'll look at some of the issues about emotion and trading. Emotionless trading doesn't exist unless you're a robot, and none of you are, I trust, on this particular presentation. And we'll briefly look at the 4 areas of trading discipline you must address, and what this will look like in the reality of your trading behaviour. So what will you be doing, or what will you be not doing with these 4 disciplines? Now, all of these things are interrelated, so it is really a tour of the sorts of things that I work with people on, and may, as I said, be relevant or not relevant to you. Not everything here is going to be relevant to you, but I want every one of you to make a couple of notes as we go in terms of what might be the things that you work on. If anybody wants a copy of the slides, then I'm very happy to share. Just drop me an email to mike@hawkeyetraders.com, and I'll more than happily send through a copy of the slides if that would be useful to you, because I do realize we are going to bang through quite a lot of information here. Okay, let's get kicked off. So there are essentially 4 gaps that exist. I'll actually bring them all up. Okay. So there's the 4 gaps exist in terms of where you can be as a trader and where you might be now. First of all, and you're all past this, is awareness. You know something exists. Sorry, you don't know something exists at all. Once you know that a particular system or a particular type of trading exists, then you move on to the next step, which is a knowledge gap, where you don't know what to do and perhaps why you're doing it. So there's various levels of knowledge, and really we want to know the what and the why. As adults, we tend to do things that we know the why behind. If we don't understand the why behind what we're doing, we don't tend to follow through on it, and that's one of the areas, or one of the reasons why people are often ill-disciplined in their trading. It might be that you've got a system gap. So you might know the what and the why, but you don't know how to do it. And then finally, of course, there's the big one, the execution gap. So you know the what and you know the how, but for some reason you're not doing it. Okay, so those are the gaps that exist, and it's not all about psychology. Decision making isn't about psychology per se. All of these things interrelate. So it may be that you're not getting the trading results that you need because you haven't got the knowledge. It may be you haven't got the systems in place. It may be that you're just not doing what you should do. So if we look at the 4 areas of trading discipline, the first one is discipline in learning. Now, many of you, I'm sure, have bought education packages before relating to various aspects of trading, be it options trading or futures or forex or whatever it is that you're actually doing. And you will have made the choice to either work through that program in its entirety, suck all the marrow out of the learning that's there, and then moved to integrate all of that into the practice of your trading, or you will not, or you will have made the choice not to do that. One of the common mistakes that I see people make is they try to shortcut their learning. So they won't learn particular strategies in any detail. They won't learn how the markets work. They will learn a little bit and then give it a shot. Okay, and I'm sure many of you have bought courses and not followed through on them completely and absolutely. So perhaps um, rather than investing after on course after course after course, perhaps you should go back and look at what you haven't done in terms of your learning. And so discipline in learning is the first of trading, the first of the 4 trading disciplines. The second discipline is discipline in planning. And this has to do with having trading plans for every strategy that you trade. A time plan saying how and when you'll interact with the market, and things like contingency plans, which are another story for another day. So making sure that you've got things around you, that everything written down to cover all bases. The third area of trading discipline is what we term system discipline. And these are investing the time to develop the systems around your trading. All of the systems. A trading system is not just a trading plan which specifies entry, exit, and position sizing. A trading plan covers all of the, a full trading plan covers all of the systems around your trading. You treat your trading like a business. Any good business that I've ever come across is based on great systems that are measured. So your system discipline is not only creating system for how you research, journaling systems, how you select strategies, how you manage the money side of things, but also how you follow through and measure all of these systems and whether they're working for you or not in terms of obtaining the best results that are possible. The final one is discipline in execution. And you'll see how these fit with some of the gaps that we talked about just earlier there. And this is really all to do with following through and making sure that all of these not just happen in practice, but are in terms of fulfilling the learning, fulfilling the planning, fulfilling the discipline, but actually seeing that in the reality of your trading on a day-to-day basis. So the first task I want you to do is to look at those 4 systems, those 4 disciplines, and be honest with yourself. Have you got all of those in place? Usually what we find from the research that we've done is that people aren't ill-disciplined across everything. It's usually 1 or 2 things that they fall down on, either because it's and they'll use excuses as to why that is. So it's too hard, or we haven't got the time, or I don't understand it, or and all of these are not insurmountable. And there's ways that we can break down those excuses into feelings and beliefs that things aren't too hard, that they are possible, that they will make a difference. So that's obviously one of the jobs that we do. But we can't do that unless you've done the work at the front end and identified where the gaps are. So that's really what most of this presentation is about trying to identify areas that you need to work on. Okay. The next thing that I want to just briefly go through is to look at how trading results occur. Let's look at the processes, the internal processes that occur, and this will give some credibility to the idea that you can't trade without emotion, that there are things which you must develop in order to become the trader you can be. So the way it works is we have the stimulus, and by stimulus I just mean any information that the market is giving us. Okay, so whatever that chart's showing you, whatever the economic data is pumping out, whatever the general perception of the market may be, we're reading these series of stimuli on a regular basis. And with our knowledge and previous experience, which obviously comes from learning, we learn to interpret this and create a response. Okay? Now in doing that, it starts with a set of beliefs and assumptions about what that information, what those stimuli actually mean. This creates a feeling and creates a need to think about something. So most of our actions are based on a need, on the feeling of needing something, needing to do something, needing to read something, needing to see something. Then we go through thinking. Now, thinking's important, and there are two different types of thinking. There's so-called creative thinking, and there's critical thinking. Critical thinking we tend to use when we're evaluating things like charts. Creative thinking we use when we're deciding which strategy, and this is obviously particularly relevant for options traders, when you've got a multitude of strategies we can use to trade a particular chart. We need to, our creative thinking usually determines which of those strategies we choose is the best fit for the best market. And that's one of my mantras as an options teacher is really, if I look at great options trade that I've had the privilege to work with, and if I look at my own results, the major difference is, or one of the major skills that people have to learn, is to be able to match strategy with underlying market conditions. So that's where the thinking comes in. Then you've got your planning, obviously, your systems we talked about, and those four things, along with the interpretation of what we're seeing, creates a behavior, and that behavior creates results. So if we adopt a series of good behaviors because we've got beliefs which are enabling, we've got feelings which are positive and channeled into the right way, we've got thinking which is both creative and critical, and we've got the right systems in place with our planning, then we're more likely to adopt good behaviors. Good behaviors are more likely to create good results. Poor behaviors based on poor planning, poor thinking, emotions which aren't channeled correctly, and disabling beliefs are not going to create the results you want. So as you see from that, there are certain things which are absolutely essential if you want to optimize your results. And one of the things that we've come up, one of the models we've come up with is this idea of trading IQ, okay, TIQ. And so what we've got is we've got four different types of intelligences associated with this TIQ. We've got market intelligence, systems intelligence, decision-making intelligence, or DI, and person intelligence. And there are things that go around this which help you create those intelligences and also help you use those intelligences in the right way at the right time. So those are the two types of thinking we talked about earlier: a set of positive trading beliefs and a learning and development plan. So all of these things go to make up a rounded and healthy, if you like, trader, moving towards higher levels of intelligence in each of these four domains. And what we've done is we've separated these out into levels, and one of the things that we do as the first thing when we're working with somebody is we get them to do an assessment looking at each of these four domains and looking at which level they're on, 1 to 4 for each of these domains. And one of the things I might do is give you access to that if that would be useful for you. So, as you see, it's not just about psychology and emotions, which is what people usually talk about. It's the integration of all of these things that create the trader you can become. So just to give you a little more on that, the market intelligence is really about obtaining good information, processing it, and synthesizing it in a meaningful way to create a reasoned opinion on what the market's doing. And from that, of course, we use that to choose the appropriate strategy or indeed make the decision as to whether to trade or not to trade. Our systems intelligence is, as we've talked about before with that systems intelligence, it's really about developing strategy plans, and putting those into practice. It's money management, it's review systems. The idea of reviewing your trading formally is again something that people give a lot of lip service to, but rarely actually follow through on. Journaling is probably the least well done of all of the if you like, processes that we would work with somebody in a trading context. So personal intelligence is looking at whether you've got a trading purpose, looking at whether you're honest about your trading, looking at how you feel as a trader, so that idea of trading self-esteem, and looking at whether your behaviors are appropriate and congruent. And by congruent, I mean you may say, yes, I need to have a plan. Yes, I see the purpose of following through on that and sticking to a stop loss and trading it appropriately, position sizing properly, journaling after the event, actually reviewing that journal, but how many of those things do you actually do in a full and complete way? Part of this is to do, again, looking at the role of emotions, part of this is to do with how the brain works. So we've got what we call a reflexive brain and a reflective brain. And the reflexive brain is really very emotionally driven, very much driven on need. And its purpose is to evaluate what's good from bad very quickly and enabling the body to take action. The bottom line is that you need emotion to take action. So that's one of the reasons why I'm absolutely delighted that people have emotions if they want to become good traders. If they've got a great purpose that's driven emotionally, then they tend to, that tends to be the stimulus, the motivation behind actually doing the hard yards at the front end, doing the learning they should do. And also within that you get what the reflexive brain does is it ignores, possibly ignores detail until it becomes important. So the analogy I often use with this is you're driving along on the road, you're not aware of every tree and every car and every person that's walking on the sidewalk, but somebody steps out in front of you and all of a sudden your reflexive brain kicks in, boom, you know, it's there, it becomes important. So the role of this is it enables you to respond quickly and it enables you to respond. Without a reflexive brain, you wouldn't respond, you wouldn't be motivated, you wouldn't be driven, you wouldn't celebrate those wins that you need to celebrate. Success is motivation in itself. So this is all reflexive brain activity. We move to reflective brain activity, which is located in different parts of the brain. This is, if you like, your calming influence, your count to 10 and step back part of your brain. Okay, so it's responsible for processing and critical thinking rather than creative thinking. It uses previous experiences to make sense of what's happening. Obviously, that's pretty important in terms of your trading. And it will act on an acceptable weight of evidence. Now, the problem is with this is if the reflective brain doesn't have the right information or isn't looking at the right things to give it evidence, it feels it's too hard, and what it gives back is it throws it back at the reflexive brain, which then makes the decision, and you start to use the force or whatever supernatural power, and your trading becomes completely emotionally driven, which isn't obviously what we want. So its purpose is really to do that count to 10 thing before you take action, which in most trading situations you can do, and just make sure that you've got all of the things in place you need to make the best decision. So these two parts of the brain create a lot of the both challenges and a lot of the solutions to some of the things that we face as traders. So when we're looking at the role of emotion in trading, we want to channel those emotions in a productive, in a constructive way, and get rid of those destructive emotions that often get in the way of good decisions. If we look at one of the key things about emotions and why some people follow through on things that they should do and why some people don't, is that trading often doesn't, for most of you, won't be an actual need. It's not a need to be a successful trader. You've not created enough reasons why you need to become a good trader. Because if we look at 4 levels here in terms of what something may mean to us, then the most critical, which becomes a must, is when we have a need. If you need to have something, then it becomes a must. If you have an expectation about something, and this is where a lot of you will be, I suspect, then that level of motivation is a should, so it's not as strong as a need, but yet still quite strong. I'm sure there are things you think you should do, but perhaps you don't. Then the next one is a desire, and often it's a desire or a dream in terms of whether we become a good trader or not. And this is the desire usually is your hobby traders who have a little bit of a flutter every now and then and could do something. And then you've got your dreamers who rarely take action, okay, because at that stage it's just a maybe. So what we need to do is we need to find things that take us from this state of dreaming or desiring to expectation, and then take it to a level of need, because that is what creates the motivation to take action. It makes it a must rather than a should. And probably the most powerful thing that you can have, that you can use to create a need, is to have a purpose which is very meaningful. It's not based on just accumulating money. It's what that money means to you. It's what differences becoming a great trader will make in your life, the choices that you have to make to those that you care about. So what does it actually mean for you to become a great trader? So that's one of the things, again, we can have a look at. How do we move it from being a desire and an expectation to need? And we often find that the level of motivation, the degree of gap between what people should do and what people actually do is based on this level of how close or otherwise it is to becoming a need. Let me just whiz through this quickly. So we've essentially got two components going on here. We've got the motivation to do something, and we've got something called volition. And motivation is where we're usually at with the level of expectation, okay? And often, so we intend to do something, we know we should do something, we may even set some goals that by the end of the month we will have mastered this particular strategy and started to trade it. And there's lots of different motivational theories that exist, some of which are a good fit and some of which aren't, and are another story for another day, or those of you who may want to go on and do some proper learning with this in greater detail will be able to have a look at. Motivation isn't enough on its own, because we need to change that into action, and this is where volition comes in. So volition is the process that leads from intention to actual behavior. So you're actively pursuing goals. So you want to become a great trader, you want to learn how to do something well, then you've got to not just be motivated, but you've got to actively intend and actually pursue that. So volition needs a greater amount of desire or intention than to simply be motivated. And again, that's congruent with this idea of moving towards creating a need state for you to become the trader you can be. One of the other reasons why emotion is important is we need a certain level of arousal to make good decisions. And I've split this into three zones to try and sort of illustrate this. So along the bottom axis we've got a level of arousal, and then we've got trading performance along the vertical axis from low, medium to high. If our level of arousal is low, we don't really care that much about trading. It's not really, becoming a successful trader is a nice idea, but it's not really something that we're really committed to. And then we're in the hobby zone, okay? And we may either be completely inactive or just relaxed about it all. Okay, we lost a few things, but look, we'll make some dollars up at some stage in the future, and we're really not that bothered because we don't need it in our lives. We really don't believe to any great degree that it's actually going to make that much of a difference. So this is usually a low emotional state attached to your trading. Of course, the other extreme is we're in a capital danger zone where we spend our trading days in a level of anxiety or panic or anger, revenge. We completely dilute any responsibility for any results that we have. It's always something else or someone else's fault, I wasn't taught properly, it's the market's fault, it's Janet Yellen's fault, it's those Europeans, it's those geopolitical events, it's whoever you want to pin the blame on, then that's the reason you're not making money. Okay? And so you spend your entire trading days in this state of anxiety, which is obviously a too high level of arousal to be able to make optimum decisions. So we've got this middle zone, which is really, again, a good emotional state, which is confident, which is calm, which is in a good place, where even if you don't like what's going on, you still make good, consistent decisions. And we call this the probable profit zone, the PPZ. So one of the things that we get people to do is look at their emotional state as they're actually trading at various levels, or various activities within their, if you like, trading agenda. So various stages of a trade, because it can differ. Some people don't get very excited and get very focused. Entries are very sexy, but as you know, your bottom line is that your profit or loss is determined on exit. And if we look at the amount of attention and excitement that entry signals and indicators create compared to that of exit, it's completely the reverse of what really it should be. I'm not saying for one moment that entry isn't important, but entry only really stacks the odds in your favour that you're entering a high probability trade. Really it's what happens next that makes the difference. So often it's what happens, this anxiety state, this panic, this anger, this idea of revenge trading, which is a bit of a soundbite, but there is some basis in that. So it's what happens next that creates the problems. So again, it's all about using the emotions that are positive, that are constructive, and removing or rechanneling those emotions which aren't. This is another way of looking at things. So if we look at the process that creates a good decision, we want a set of market circumstances that enable you to calmly and confidently identify that an opportunity may exist. You need an environment which is conducive. You need a psychological state which is not distracted, which is focused, and this creates this attentional state which is ideal. And then of course all of those things go to make up trading consequences. So again, when we're getting people to look at what may be happening in terms of their decision making, we get them to look at all of these situations and see if there's anything there that perhaps could be tightened up in terms of putting themselves in the best place to make the best decisions on a consistent basis. If we look at trading outcomes, okay, the tendency is to look at a win-loss ratio. Win-loss ratios are not a great thing to have a look at. They're not the major determinant. Those of you who have heard me talk before on options, I put up a screen which showed a portfolio with in excess of 200% return over 55 trades, and the win-loss ratio on that was 50-50. It's really this idea of making sure that your average win is significantly better than your average loss. So in reality, it's about making consistently good decisions. When we look at a trading decision to enter or exit, there are four potential scenarios. The first is it's a hit. So we get into a trade when a signal was presented. So we say yes when a signal is there to get in, or we say yes when there's a signal there to get out. We can have a miss. So a signal presents itself, but we don't get into the trade. For whatever reason, we talk ourselves out of a trade. Then we get what we call a false alarm, which is saying yes and getting into a trade when there was actually no signal. So you've talked yourself into a trade in this situation when one didn't exist. And then there's a correct rejection, i.e. saying, no, I'm not going to get into this trade when there's no signal there. So of course A and D are the healthy places to be. You want to be yes when the signal's presented, and you want to say no when there's no signal. But invariably, you'll find that, and this may be on entry or exit, then people will either have a series of misses or a series of false alarms. And there's a reason behind this, which is all to do with a particular bias that people have inside of them. And so these two biases we can term a preventative bias or a promotional bias. Okay, entrepreneurs tend to have a promotional bias. Those of you who are more conservative would tend to have a preventative bias. So let's just explore those in a little more detail for a couple of minutes. So promotional focus is where we want to, where our attention is making sure we don't miss. Making sure that we get in there when it's an opportunity to get in there. So we tend to have the correct yeses when there's a yes signal produced, but we also, if we've got a promotional focus, tend to have the false alarms. So we enter trades where we really shouldn't be in there. We're sort of thinking ahead of the trade. We're a little itchy on the trigger finger. So our bias, if you like, is we don't like the idea of missing a good trade. If we miss a good trade, then that's what creates the pain. The pain isn't taking risk. The pain is missing a good trade. Does that make sense? So we may talk ourselves into a trade, and some would term this a riskier or an optimism bias. So we've got this greater inclination to say yes when we shouldn't, perhaps. And we may also talk ourselves to staying into a trade. We may say, well, look, if we get out today, we may miss the opportunity when it bounces tomorrow. So that's a promotional focus. If we've got our preventative bias in place, then what we do is we tend to put things in place which make sure that we don't enter trades particularly good at the D before. We don't enter trades that haven't got a signal. We're very good at that. But because of this need for security, because of this fear of loss, because this is where it originates from, almost a loss aversion bias, if you like, then what we tend to find is that people with a primary prevention bias tend to miss those entries. Tend to talk themselves out of a trade, whereas promotional bias tends to talk themselves into a trade. And they may also talk themselves out of letting a profit run. They're often particularly good, often okay in terms of adhering to stops, but not particularly good in the other half of that, keeping your losses small, letting your profits run. So on the one hand, you've got one, that those are the prevention bias, usually good at keeping losses small, but rarely let profits run. And the promotional bias, you tend to have a tendency, and it's tendencies not all the time, but a tendency that most of the mistakes are made by not cutting your profits when you should. So it's going to go up another 5 cents, it's going to go up another 10 cents, and also believing that something's going to recover when it shouldn't. Sometimes with a promotional bias, we also get people trying to resuscitate trades, particularly options traders, with other little strategies and adapting things when really they should be out of it altogether. So to summarize all of that, we've got our promotional is on the right, where we seek the pleasure of the win, okay? And we moderate our behavior to keep on hitting these desired outcomes, okay? So our desired outcome is the win, and so we'll do as much as we can to keep on generating wins. So we've got a mismatch there. So if you do feel as though you've got a tendency to do this, then the work tends to be on looking at the undesired outcomes. So not being worried about missing out on a great trade because the next one's coming along very soon, and making sure that when a stop is hit, you actually get out of it. And if you, what we're doing is we're ensuring correct entry and incorrect emissions. Your promotional bias tend to want to avoid pain. Okay, so we're moderating our behavior to avoid undesired outcomes, which is usually the pain of losing money. So that's why we adhere to stops and perhaps rip a profit off before we should. So our mismatch in this particular case is to acknowledge what you're good at, i.e. keeping the stops, but work hard on letting those profits run as you should do. And again, what you'll notice is both of these have both entry attributes and entry implications and exit implications. So the chances are that one of these resonates with you more than the other. Your mission from this is to go away and think about, well, which one might it be? Be aware of it, and then start to work on perhaps the thing that's not that you are seeing on a regular basis. So if you're seeing yourself cutting profits short on a regular basis, be aware that that's okay. Acknowledge the behavior that's good, that usually goes along with that, and then do some work alongside creating a weight of evidence to enable you to address that mismatch. And the same can be said for the promotional bias. If you're good at letting your profits run, good at getting into trades when you should, maybe have a little itchy trigger finger, and maybe don't take losses when you should, then you know what it is to work on. And so your mission is to create a weight of evidence that if you do those things to balance that mismatch out, then you're in a place which is going to create better results. People won't change unless they've got a weight of evidence to change, and that's obviously one of the things that we do when we work with people. So just to reinforce that, your trading implications are: identify which focus you have to avoid the mismatch, reinforce the benefits of measuring the trades that you don't get in, as well as the ones that you do, and articulate in your goals both focuses. So you want to maintain the behaviors that are good, but also avoid the behaviors which aren't, by creating, and the only way to do that is to create this weight of evidence. Okay. So in terms of going forward from here, when people develop a plan to go forward, there's two ways they look at things. They either look at things in a let's solve problems way, or they look at things that let's make better, and it doesn't matter which it is. So in terms of if you're a problem-based trader, in terms of wanting to make things better, then you look at what problems have I had and you don't want to repeat in the past. What problems do I have now and want to find immediate solution for? And what problems do I think I might have in the future and usually that's something that you don't feel as though you're prepared for. So if GFC happened again, would you be prepared for it? If you're only trading one option strategy, perhaps you find market conditions which you haven't got a toolbox to trade. So that's all to do with identifying problems. So your mission from here is to write down the problems that you have with your trading. Okay? The second way of looking at things is based on victories and wanting to reinforce them and wanting to develop further. So you can look at what victories have you had in past performance, and so you want to lock those in and mirror them on an ongoing basis. What victories are you having now, and could you make them any better? And of course, what victories may you have in the future, which means what do I need to put in place to make sure that they happen? So those are the three things to do with if you like, a promotional approach to trading development. So on the one hand, you've got problem solving, on the other hand, you've got promotional, and you can do both. So as I said, one of your missions is to perhaps write 3 problems that you see in your trading now that you want to solve, and then 3 great things that you think you could potentially make better, or you want to mirror. I trust that makes sense. I want you to take some action from this. Don't just make it another session that you pop into and say, oh, that was all right. Yeah, okay, now let's get back to doing exactly what we were doing before. Because obviously that means you're going to get exactly the same results as you had before. Okay, so there's another little mission for you to do, I did tell you. So the problem is that when people look at problems, so they'll write a list of 3 problems and they'll look at this in terms of, they should look at things in terms of which problem, if I solved it, So if you had 3, which is the number one, which problem, if you solved it, would serve your trading results the most? Okay? Not which problem is easiest to fix, or which problem will take the least time to fix, because invariably that's what we do. We choose the easiest route, where people will look for the path of least resistance. So we look for things that are quick or things that are easy to fix, rather than the major problem that will serve your trading results most. So if you've written 3 problems down, or if you've made a commitment now, make a little note, all right, 3 problems down, which is the one that will serve your trading results most, and work on that. That's one of the things that you can take away from this and put some action behind. Okay, so look, we've covered a heap of ground on this already. So how do we create this trading mind shift? Well, by a trading mind shift, we really mean that it's not creating a mindset. A mindset is usually just a set of belief statements. But what we want to do is we want to take the way that your mind works in its entirety, so the way you channel emotions, the way you think, the way you learn, and we want to put them into a place which is the most healthy to enable you to be consistent, to enable you to be happy, to be comfortable, to be confident about your trading decisions. If you're not confident about your trading decisions, it's very, very difficult to make money. It's very, very difficult to be disciplined if you're not confident. It's very, very difficult to be calm about your trading. So it's a mind shift rather than a mindset that we're looking to take to the next level. And obviously, part of what we do is we run we run some courses as well as coach on a one-on-one basis. So there's a couple of things that I thought I would put in front of you today, which you can have a look at. If you feel it's right for you, it'd be great to have you on board. So I've got one that's the standard course, which I've created a fairly incredible deal for, and one which is just a short, sharp, get you started, get you kick-off sort of opportunity. So the Trading Mind Shift course is really about having maximum control over the way your mind works to accelerate your results, okay? And developing that consistency that you know you need to make sure that you have sustainable results for a lifetime of trading, because that's what you're in this for. You're not in for the next year or 2 years. You're in for a lifetime of trading. You want that to create some fantastic life choices for you, yes?